which has kicked in Zomato, Paytm, Policy Bazaar, some of the stocks have slipped. I would use the word slip here, not like a crack. Paytm 878 days low. PB Fintech almost crawling back to the days low. Nykaa has not participated at all. So it's a immaterial stock now. Kunal, what could be the turning point for some of these new tech stocks? They've had a crack and a V-shaped rally. Are they likely to extend themselves more?
I think they should extend the rally for themselves. I don't see an immediate correction for either of the names. So I think whether it's the likes of Zomato, which I think has done exceptionally well from I think 45, 47 rupees, 50, 52 rupees rather, just about 2 or 3 months back to now 75 odd mark. So I think it's done reasonably well for itself. Policy Bazaar, I remember I think post the budget is where the stock picked up pace, and I think it's gained more than 35% from those levels. Paytm has been one of the recent breakout stocks. Even Nykaa has recovered back towards the 200 moving average. So when you look at the 4 charts as such in a very broad-based manner, the trends have been very strong, very sustainable, and it's not gone through a very V-shaped recovery. These stocks have had their phases of correction even in the last 30-40% of the rally for individual for these individual names. So I think that's where I would believe that the trend should be sustainable.
Have they become overbought now? Because it's the pendulum which swings from oversold to overbought and overbought to oversold. Viresh?
So in the near term, yes, some of them have become overbought because they've gone up 30, 40, 50% over the last 1.5 month. So out here, yes, overbought in the near term, but not that overbought wherein you say it's a top in place. So a 10% correction from the recent tops would be normal. So expecting some bit of a dip and pause in a lot of names which have moved up in the near term. And that would be part of the, say, cycle wherein you go down 50-60%, make a bottoming out formation, go 40-50%, take a little pause, and then maybe another leg up. So for now, would be waiting for a dip in some of these names to look for an entry again.
Yeah, I think some of the names which Nikunj mentioned, like Ethios, I think it's a fantastic stock in terms of the last 1 year of uptrend. Post listing, the stock has done exceptionally well. There was just one phase of a correction. I remember, I think for Ethios, I think the last 2 months where the stock had corrected some 10-15%, but the way the stock has recovered back towards 1300 mark from 1000 levels, I think just about 3-4 months back, I think is exceptionally strong. So a lot of the stocks from this space look attractive.
And I think, that's the other debate, right, Nikunj? Because the luxury end of the market or consumption story is very well known, right? We've already seen the kind of numbers that you're getting from some of those luxury realty plays, cars, watches, whatever you can think of. Is now the time to go confident bet on the rural consumption play?
No, I shall tell you why. Because ultimately you have to look at, do you want to go for mass or you want to go for companies which will enjoy pricing power. A luxury watch, and if the design is nice, the buyer does not mind paying that 10% premium. But if you're buying, let's say, something which is where the price conscious consumer is there, he's not going to pay that 5% extra just because the packaging is great. Great, Apple is a great product company because they make good products and they charge a premium, and that has given it a market cap of $1 trillion because they connect very well with the appetite and the demand and the design appeal of the consumer. I've always said that, look, do you want to go for mass or do you want to go for niche? In India, the way the society is migrating now, we are going towards what could be called as pyramidization of the structure, and you should always be with companies which in a sense will get disproportionate amount of benefits, margins and mind share provided you get their product right. The reason why you have less rich people on the planet and rich will always remain rich is because they understand how to create wealth. It's nothing like a comment on that's a societal structure which you have in the world. That's the way it is.
Yeah. Okay, let's get in some BTST trades as well going on that note then. Nuresh, let's have your calls.
So first would be a buy on Samvardhana Motherson. The stock has broken out. Stop loss at 84 and a target price of 90. Second is a buy on Max Financial Services. Lot to catch up with the rest of insurance names. Stop loss at 728 and a target price of 760.
Right. Kunal, what about your ideas?
So I'll go with a couple of buy calls and expecting or anticipating buy into few trades. So Tata Chemical is the first stock. The stock has been into the a lot of news flow negative. But I think at current levels of 995 approximately looks very attractive for a breakout. 1040 as the target for Tata Chemicals, expecting a breakout. Stop loss at 975, and TCS is the other stock from the large cap IT space. Looks attractive. In fact, on the hourly charts, it's formed a triple divergence on the hourly time frame. Looks attractive for potential target of 150 points on the upside. So 3,400 as a target and stop loss at 3,150.
Okay.